Good morning, student. I am Dr. A. Radhakrishnan, Assistant Professor, PG Research Department of Commerce, St.Joseph College of Arts and Science, Autonomous, Cuddalore. Today, discuss about Management Accounting, Unit 3rd, Fund Flow Statement. First, what is funds? The term of funds generally refers to cash equivalent or working capital. The definition of funds. According to Paul C. Astin, the total amount of funds used in firms' operation is equal to the total assets employed in enterprise. This view supports the broadest meaning of funds as total resources. Fund flow statement meaning the fund flow statement is based on the working capital concept of funds. It measures the inflow and outflow of working capital resulting from different business transactions. The fund flow statement. We are calculating the fund flow statement and solve the problems. First, the principle for preparation of working capital. How is preparation of the working capital? The working capital increase in current assets, increase in working capital. Decrease in current assets, the decrease in working capital. Increase in current liabilities, decrease in working capital. Decrease in current liabilities, increase in working capital. So, the fundamental basic rules in the preparation of the working capital. Next, the preparation of fund flow statement. The step by step. First step, the preparation of statement of working capital. Second step, calculation of fund from operation through the adjusted profit and loss account. Third, preparation of fund flow statement. So, three categories, three steps in preparation of the fund flow statement. First, sum number. We are preparing for example one sum. We are calculate sum number 28, page number 4.82. We are preparing the fund flow statement. First, we are preparing the schedule of change in working capital. The schedule of change in working capital take one for the current assets and current liabilities dealing. Current assets and current liabilities dealing. The current assets, first cash, 2004 and 2005, the base year, 2004 42,000, 2005 32,000, the decrease 10,000. Bills receivable 42,000, 2005 62,000, increase 20,000. Stock 2004 84,000, 2005 98,000, the increasing 14,000. Total current assets 1,68,000 2004, 2005 1,92,000. The current liabilities. Creditor 38,000 2004, 2005 46,000, so decrease 8,000. Bills payable 5,000 2004, 2005 4,000, 1,000 rupees increase. Provision for taxation 10,000 2004, 2005 12,000, so increasing 2,000. Dividend payable 7,000 2004, 2005 8,000. The decrease 1,000. Total current liabilities 3,19,000 2004, 2005 3,65,000. So the current liabilities minus current assets minus current liabilities. So increase in working capital 14,000. Now the we are calculating for the fund from operation. Fund from operation based on the net profit from the both year, previous year and current year, The net profit for the current year 1,34,000. Only for less opening profit 1,04,000. Fund from operation we are calculate only 30,000 rupees. Then fund flow statement. Fund flow statement we are preparing for already told the class the format of fund flow statement. They are sources and application, two sides. Sources, whatever the income in the company, that's the sources. Whatever expenses in the company, that's the applications. Now that sum, the 28th sum, we are first we see the share capital. Share capital last year 1 lakh, now this year 1,10,000. So 10,000 increasing the share capital, that is called for the issue of shares. Increasing in equity shares. Equity shares last year 2,20,000, this year 2,50,000. So 30,000 rupees issue the shares. Increase in share premium. Share premium last year 20,000, that year 26,000. 6,000 is the share premium. That's the sources in our the company. Already we are calculating the fund from operation. So 30,000, total 76,000. The application side, we are going to the application side. Increasing in machinery 2,30,000, 2 lakh last year, this year 2,30,000. So 30,000 is the increasing value. So that is purchase of machinery. And increasing in building, the same purchase of building 26,000. Last year 1,50,000, this year 1,76,000. So newly purchased the building 26,000. Increasing in working capital, already we are calculating for 14,000. And decrease in debentures. Debentures last year 70,000, this year 64,000. We are reducing the amount, their liabilities are reduced, so 6,000, total 76,000. The both the sources and application is the same total. Thus the 28th sum is over. Then the next sum we are calculating for the same fund flow statement, but the 38th sum is a different sum. The additional information, the adjustment, we are calculating 38th sum. Sum number 38, 4.88 page number. We are calculating for fund flow statement. First we are calculate the statement of change in working capital in based on the problems. First the current assets, current liabilities. We take current assets, current liabilities. Based on the current assets, current liabilities, we are calculating for the statement of change in working capital. Current assets, stock, debtor, cash. The same year 2004-2005, current assets stock last year 10,000, this year 8,000. So 2,000 is the decrease. Debtors last year to 12,000, this year 2005 16,000. So 4,000 is the increase. Cash 2004 no, 2005 9,000. So 9,000 is increase. The total current assets 22,000, 33,000. The current liabilities, creditor, only two item of current liabilities, creditor and bills payable. Creditor last 2004 16,000, 2005 19,000. So the decrease value. Bills payable 2004 4,000, 2005 3,000. So increasing the value 1,000. The total current liabilities 20,000, 2004, 2005 22,000. From the difference between the current assets and current liabilities, we are calculate the change in working capital. So increase in working capital. Next the adjustment. The adjustment is only the building and machinery. Two adjustment. Building is certain percentage of depreciation. The machinery is certain percentage of depreciation. Building opening balance 8,000. Closing balance 12,000. So we are start the opening the machinery account. We write for the debit side to balance brought down 8,000. By balance carry down 12,000. Already has given the book. By depreciation 10% and give the adjustment in the problem. So 8,000 into 10 divided by 100. So 800 the depreciation. Total 12,800 in the credit side, the highest amount. The debit side only 8,000 the opening balance. So close the balance 4,800. Purchase the machinery, purchase the building. And then second adjustment, the same 10% of machinery depreciation. There we are open the machinery account. To balance brought down 50,000. Closing balance 70,000. By depreciation 50,000 into 10 divided by 100. We are always calculating the depreciation in the opening balance, not for closing balance. So 10% depreciation we are calculate 5,000. So the purchase of machinery 25,000. Next, the adjustment have the additional information. 1. The provision for tax. Provision for tax in the adjustment is the tax paid 28,000, not for provision, but tax paid 28,000 given the adjustment. We are calculate the open the provision for taxation account. In the debit side, to balance carry down closing balance of tax 35,000, opening balance of tax 32,000. So in the adjustment tax paid 28,000. So the balance close the balance, the 31,000 is the profit and loss account. The by balancing figure of 31,000 is the profit and loss account. Now second, there all the adjustment is over. Then we are calculating the funds from operation. First we are take the net profit for the year 30,000. Whatever the adjustment in the according to the format. Depreciation on machinery 14,000. Depreciation on building 10,000. Already we are calculating the account of machinery account, building account. Add dividend paid 23,000 and the given the problem adjustment. Tax paid 31,000 we are calculating in the provision for taxation account in the working. The transfer of general reserve 60,000, 50,000. So 10,000 is the transfer of general reserve. Goodwill return of 5,000. The comparing the last year and this year. The total 93,000. So the net profit 30,000. We are total of 1,23,000. Less opening profit. At the beginning of profit 30,500. So funds from operation 92,500. The finally we are calculate the fund flow statement. And the sources only for two. Already we are calculate statement of change in working capital, fund from operation, and the open the machinery account, building account, and provision for taxation account. Now we are final stage for the fund flow statement. Only two. One is the issue of shares. Last year 50,000 share, this year 70,000. So issue of share 20,000. Fund from operation we are calculating already the fund flow statement 24,800 in the sources. Application side, purchase of machinery 25,000 we are calculating for the machinery account. Purchase of building 4,800 already we are calculating for the building account. Increase in working capital, there we are calculating the statement of change in working capital, so 9,000. Dividend paid in the calculation of account, the 6,000. Total 44,800. The same fund flow statement and the sources and applications. So there's both same amount, same the. Now we are today is two problems we are discussed, and next the sum number 44 as we are discussed and the second next classes. Thank you, students.